is the biggest driver of the market? Let's bring in Lindsay Bell, Chief Investment Strategist with Invest Ally, and Larry Adam, Chief Investment Officer with Raymond James, to discuss that. Lindsay, why is the market acting the way it's acting?
We had this really impressive run in summer right into the beginning of September. It increased valuations, just like you guys talked about, up to the 25 times mark on a PE basis. That's a level we haven't seen in more than 20 years. And I think that we are in a volatile month, and there's this lack of information flow. You listed out very nicely all the concerns that are on investors' minds right now, but those are concerns that have been persistent for a couple months now. So why the worry and focus now? Because there's a lack of focus on other things like earnings, for example, or especially one of the key topics is stimulus. We've seen that really removed from key headlines in recent days. So investors are looking for direction, and the market as such is acting in a bit of an erratic way over the last several days.
Yeah, it certainly does feel that way, and to hear you put a sharp point on it like that is I guess, comforting. Larry, let me turn to you, and obviously there are a couple of sort of binary trades. There's tech versus non-tech. There are consumer cyclicals versus non-cyclicals. And there's also the so-called reopening trade versus the stay-at-home trade. And on that, where would you put fresh money now? In the reopening trade or in the stay-at-home trade? Where is the greater opportunity?
Yeah, I would continue to put money with the stay-at-home trade. As I've been on the show before, we've talked about that K recovery, where you want to be at the top half of the K, where you have visibility in earnings, and you can see where the earnings are being revised higher. And those stay-at-home sectors like technology, communication services, healthcare, and consumer discretionary, as you mentioned, that's where you're going to continue to see the best earnings going forward. So that's where I would continue to put it. And by the way, you mentioned tech. One of the things that people continue to talk to me about is that tech looks expensive, but I think you have to look at tech in the earnings sense in that we're going to have earnings season coming up here soon, starting October 26th for the big tech names, and they tend to come in about 7% above their earnings expectations. So that kind of draws back some of that froth that a lot of people think is in that sector.